This content is for informational purposes only and is not financial advice. Please read the disclaimer below.
Hi everyone, I have always been passionate about investing, and I have seen a lot of videos discussing investing and diversification. However, always found a couple of elements missing, so here's my take on this.
I plan to cover off the following 3 things in this video.
1. What is investing? A personal view. If you want a theoretical definition, you're in the wrong place. Save your time. 2. Understanding when to invest and where. Discuss various asset types.
3. Diversification, when to ignore it and let it come naturally. So let's get started with what is investing.
Investing is a mindset.
You enter the role of an investor similar to like you dress to go to an office or play a sport. Consciously getting yourself in a role is important for making investing decision based on rationale rather than feeling. Though I believe feel should be one of the criteria for selecting the investment.
Investing is continuous and should be taken as such. For example, if you have invested 100 and the tenure has ended, you should have a plan to reinvest either in the same or different asset class.
Your intention as an investor is to make best use of that 100 and make it work the hardest for you over time till you need that amount.
Fruits of investment. These are fruits that are picked from matured investments or investments that have achieved their objectives. Example, some fruits are picked monthly, whereas others are picked annually, end of 3 years or 5 years, or never picked in your lifetime and passed on to your family.
Let's now talk about where to invest in and when.
The when refers to a timeline, so it is best to put your life's journey on a timeline. As a conscious investor, you have to invest an amount over the course of your timeline. The where is selecting the right asset class to invest in. The asset class in most cases is driven off the amount you have to invest. Example, if you have 100, you cannot invest where there is a minimum criteria of 1,000. Hence, why worry about that now? It will come to you in your storyline, so the best thing is focus on things in your control and available for you to invest in. Investing is like a train journey. Different train tracks symbolize distinct asset classes, each promising specific destination based on risk and return with varying times.
You, the investor, are the traveler, choosing the track that aligns with your objective. The stops along the route represent milestones you set, making progress towards your wealth haven.
You can travel on one line, however, you can send your investments to travel on other lines, giving you passive income.
Regardless of the timeline, an investor goes through various stages, such as beginner, aspiring, established, mastermind.
Some people go through them faster, while others at their own pace, whereas some are content at being at established stage. Beginner, someone who is starting off or restarting their investing journey. They usually have less capital and are aiming to build a foundation. Where do they invest? Likely aim should be to create a base investment to stand on.
This is usually low risk and easy accessible. Example, fixed interest or interest-bearing accounts with a term of 3 to 5 years. What is the investment amount?
A good idea is to have 3 to 5 months of income to create a safety net to cover your needs. Should things go south? It also helps establishes the groundwork to build your future wealth. When would you use it?
You will likely never in your lifetime use this amount and will always be there for risk mitigation and to keep you sleeping like a baby.
Aspiring, someone who has their base investment sorted, now wants to explore other investments. They are aiming to grow their confidence, seeking guidance, and are open to test strategies. Where do they invest? Invest in medium risk investments like real estate or stocks, including buying their first home.
What is the investment amount? While maintaining their safety net savings, invest equivalent to 6 months of your income before switching to a different asset class.
When would you use it? Income from this should contribute to your savings to invest in your next asset class or stage.
Established, someone who has a solid portfolio, starting to manage risks and seeks consistency in returns.
Where do they invest starts to balance the portfolio, depending on their age, and has a mix of interest-bearing accounts, real estate, living in and invested stocks and cryptocurrency investment.
What is the investment amount?
5 to 6 monthly incomes in each asset class with a larger foundation based on your risk appetite. When would you use it? Income from this should be consolidated and portfolio redistributed to increase in your next asset class. Mastermind. Someone who is an experienced professional can influence markets and work with complex strategies. Where do they invest? Venture capital funding or impact investing? Not going to detail this out now, as if you are in this category, this video is not for you. Please save your time. Diversification means not all eggs in one basket, but what if it is creating wealth for you? Would you stop investing in that asset class? I believe that diversification comes naturally as you progress and invest in various asset types based on your risk appetite. When you are within an asset class, you have options to diversify within that asset class. Example, stocks can be blue chip or growth. Real estate can be within 20 kms of city center or suburb. Crypto can be main coin or altcoins.
Hence, allow diversification to happen progressively and not chase it.
Well, that's a wrap.
What's next? Thinking about discussing asset classes. If you believe I should prioritize a particular asset type, do mention in the comments. Like and/or subscribe, and feel free to provide feedback in the comments.